Hello. Like I said, if you guys have questions that you want to, this is an Ask Me Anything. I will be talking about anything real estate related, our current deals, any questions you guys might have, some of the things I'm working on, some life updates, all sorts of stuff we'll be chatting about. If you have any questions, there's a Facebook live stream on my story. You can find me at the same address, the same URL, I guess, on Facebook, AJ Smith Real Estate. Without further ado, I think we'll just jump into it. So the first thing I want to talk about is just kind of a life update. So we've got a lot of deals going on, but in terms of New Year break, it was a great time. I took 2 weeks off, went and saw family, spent a lot of time just hanging out with my nephews who are so incredibly smart and have so much personality, even at like 4 years old and 1 year old, 13 months old. It's really, really incredible to see just the people that they're becoming, even though they're very young. So that's been really neat. I went down to San Antonio to see my brother, and it was way warmer than Iowa. Fun fact. And it's something I really enjoyed. I mean, it's like 13 degrees here right now, whereas in San Antonio, it's, I think, 80 degrees when I was there. So very hard to come back. I'm not going to lie. It had me thinking about moving down there and staying. Not yet. I'll be here for a while, but really enjoyed my time in San Antonio, celebrated my brother's birthday, spent time with my nephews and some other family members. So a really, really nice break. Some of the other things that we got up to, we did a little bit of karaoke, walked around a Japanese tea garden. You guys will see that in some of my posts. You'll see some photos of me, my nephew, the tea garden itself. We went to Topgolf, enjoyed some family time, and just kind of unwound. And it was a really, really nice time. The second thing I wanted to chat about here, update on our current deals. So we've got a lot going on right now in the real estate space. In some other spaces, I think I'll leave the other spaces for another time. But inside the real estate space, I think we've got like 11 current deals, and we have another 2 that are in the pipe, 3 actually as of today that are in the pipeline. A lot of them are flips, house flips. We have some that are multifamily. We've got a fourplex that is in the mix. We've got a 50-lot mobile home park development that we're working on currently. We have some larger apartment complexes that we're looking at. There's an 8-unit apartment complex that we're about to close on in the next month or so. And so there's a lot of moving parts, a lot of capital being moved around, deals being purchased, contractors being paid, work being kept up with. And so one thing I wanted to touch on is just how do you manage all of that? How do you stay organized? How do you make sure that nothing is left in the dust, or like nothing's left out of the loop? Just you don't want to miss any details, because there are so many deals going on, and each deal has a process and a specific set of steps that have to be followed in order to be successful. And those steps have to be followed sequentially, and also in a time frame that is to success in that deal, right? You want to do stuff quickly, basically. Don't want to put extra words on it. You want to do stuff quickly. And in order to do it quickly, you have to know what you need to do and order it needs to be done in, and what are all the steps that need to happen. So one of my favorite tools I use is Asana. And we use that for project management. I've hosted a couple different calls with investors just explaining like, hey, here's our process. Here are the templates that we use, which have saved us so much time, guys. I can't tell you how much time that saved us, because every time we have a new deal, we don't have to go back in and upload all these tasks and say who does what and when it's due. It's already in the template. And we use that for every single deal. We actually uploaded 2 more deals today, and we're using that same template, and it has saved us an incredible amount of time. So if there's anything I'd share with you guys right now, is if you can, even the free version of Asana was an upgrade from when we started, but if you can get the paid version, get your team on it, use the automations and the templates that are in there, I totally believe, and I advocate to you, it is worth the time. It's worth the time to learn it, but it's also worth the money. I think it's like I don't know, or I'm paying like $30 to have 3 seats on Asana. And every deal, we just, it's the same steps. We go through the same thing every single deal. And the amount of time that that's saved us, just being able to basically copy and paste those steps and copy and paste the deadlines relative to when we started the deal and who is responsible for it, has been so impactful. So one thing on that may be of benefit to you all that are listening that want to get into flipping houses or larger apartment complexes, I'm working on getting this template to be downloadable. So if you guys do get Asana, you can just plug it into your own system and start playing and start using it for your own business. So I'm working on it. I'll let you guys know when that's ready. I'm really, really excited to be able to share that with you at some point in the future. But that's something that has had a great organizational impact on our business and a great time impact on our business as well. There's some other things, other automations that I'll reveal to you guys probably in the next couple weeks in future live videos once we have them all worked out and all the kinks kind of taken out and whatnot. But rest assured, there's a lot of things that you can do and that you can learn to do that can speed up your business processes. So just wanted to bring that up because that's something that I've been passionate about and working on for the past couple weeks or so that has had an impact on our business. So we talked about kind of a life update, update on current deals. And I want to make an honorable mention. I'm going to come off the camera real quick, but I'm going to come back with a gift that one of my friends that's an investor gifted me that has been very impactful. So I'll be right back. Many of you will recognize this book. This is $100 Million Leads by Alex Hormozi. I spoke with one of my investor buddies who's in my same mastermind, the Deal Room, about $100 million offers and what kind of an impact it's been having on our business so far. And the very thoughtful and generous person that he is, he sent me this book in the mail. I wanted to shout him out real quick. His name's Brian Audia. Thank you again, my friend. I want to give a public shout out for you because this is awesome. He even signed it as well, which is pretty cool. So this is a book, if you don't know, $100 Million Leads, about how you can get folks into a funnel. Basically, how do you attract people to you that want to buy your stuff, work with you, benefit from what it is that you do. And this is incredibly impactful for anyone who has a business. And I've personally sat down with various business owners that are in service-based businesses. They might be in product-based businesses, and they've all found value from just an explanation of how this works. So if you have not picked up this book yet, it is a fantastic read. I think there are a lot of actionable items in here that will help you in your business and that will help you grow your business as well. So I'd say $100 Million Leads actually is 102 if I were to give, an educational course. $100 Million Leads would be number 2, 102. $100 Million Offers would be 101. And then there's a third book called Invisible Selling Machine, and that would be 103, just teaching you, how do you create a good offer, $100 million offers? How do you create a good lead magnet? How do you start bringing people toward you and wanting to buy your stuff? And then after you get them in this funnel, how do you create a funnel that then sells them on whatever that item is? And that's the Invisible Selling Machine. So fantastic book, pretty quick read, pretty easy read. If you have a business, I'd recommend that to you as well. So that's the honorable mention. Just wanted to shout out Brian. Great dude. Thanks, man. The starter question that I have here, and we'll go as long as you guys have questions. Again, if you guys are in Instagram, if you're watching, and if you have any questions, pop over to my Facebook /AJ Smith Real Estate, hop on the live stream in my story, and just give it a view and put a comment in there. But the starting question here is, when will the market crash? And I love this question. Everyone wants to know. Here's my thesis, my hypothesis, and my belief. Number one, no one knows. If they tell you they know, they're lying, unless they have gobs of money and they've made it by making this guess correctly multiple times. Okay. Point to a person that's done that. I'll follow them and I'll do the same thing. But my point is like, no one really knows. However, you can look at sale prices. You can look at lack of activity in the commercial real estate space. And I'd say we're already going through a correction. In the offers that we've been submitting and all the other operators that I've spoken to personally about commercial real estate, about the offers that they've been putting in, they've been looking at a 30, 40, sometimes even 50% price correction from where the owner is asking to where the deal actually makes sense. And we've seen that come because, again, interest rates, I think this is almost an old story by now. A lot of people know this, at least in the commercial real estate space, but I'll share it here just in case folks don't know. Interest rates rising had an incredible impact on commercial real estate pricing, especially because a lot of the folks in this industry were using short-term loans called bridge loans, and that had variable interest rate pricing. And when interest rates double, that means that your debt service on these buildings skyrockets. So if you're just scraping by, if you're trying to improve the property, make it nicer, but you're on a short term, let's call it 3 to 5 year variable rate debt product, and you're getting closer to the end of that period and interest rates skyrocket, you're in a pretty bad situation. So there are a lot of folks that had that happen to them, a lot of syndicators, even folks that, may have bought it with their own money and they're just trying to leverage and become more competitive in their offerings. Because if you guys don't know, in 2021, 2022, 2020 especially, prices had a run up because interest rates were so low and there was so much demand, and people were like turning apartments and selling it to someone down the street who was going to try to push it even further because the market just kept going up, right? But that creates this house of cards where people just keep passing the hot potato. I'm mixing metaphors. People keep passing the hot potato to someone else. It gets to the point where like someone's left holding the bag when the interest rates go up. And that's what happened to a lot of these folks is they believed they could use the variable interest rate products, get in, get out, sell it to someone else and still make a profit. But unfortunately that was not the case. And there were a lot of people that were caught off guard. Even though there were folks who have been through multiple market cycles and saw it coming, because interest rates were so low, they had to come up. Just historically speaking, that's, it's kind of what happens. If you have super low interest rates, the economy gets overheated. You have to raise the interest rates because, you got to get it back under control. So a lot of folks I know that are experts in my own local market, but also in kind of more national real estate in various markets, they saw it coming and they slowed down their purchasing because they saw how overheated the market was, how unreasonable the pricing was, how there were bidding wars on all these various properties. And so they pulled back. Well, to answer the original question, when will the market crash? Those folks are going back in the market now. They are deploying their capital. Some of them are still waiting, but many of them are deploying their capital because a lot of the folks who made that initial mistake of the bidding wars, the price wars, they are now getting wiped out in their equity. They are folks who overpaid and now they can't afford the debt payments because their interest rates skyrocketed. So they can't hold the property long enough for their overpayment to be wiped away by, time, by loan pay down and rents. Because their debt service is so high, they can't afford it. They're running out of money. And so with that, if you can't afford to make your payment, it goes into foreclosure, wipes out your equity. Well, now what are you looking at? You're looking at banks who are holding the bag on many of these properties that were overvalued, because there's also an issue in the real estate space. Some markets, some properties where the appraisal is basically just kind of written to meet the purchase price. Thankfully, that's not every appraiser, but you now have banks where their appraisers did that and they gave a loan that was too high, and they're having to write off some of these properties because the new purchase price is below their loan amount, even after the original owner's equity was wiped away. Now the bank is holding the bag on a certain loan amount. Well, the new purchasers can only buy it for this much because this is where it makes sense to purchase the property. And so that means the bank has to write off a lot of that loss as well. And so we're seeing that in some deals and across the country where, banks are taking losses, investors are taking losses. And that presents an opportunity for folks who have capital ready. They have contractors ready, and they're poised and, have the mindset to take on these deals and to turn them around and, either hold them for the long term or make a profit on them and move. But I think a lot of people have learned from this past market who were very new, because there were a lot of new people who went into the market. And thankfully, I've had folks in my circle who have been coaching me since I joined. For example, I'll digress into a short story. When I bought my first fourplex, the banker for that property gave me two options. He said, do you want a variable rate loan or do you want a fixed rate loan? And I looked at the variable rate loan and it was like, 50 basis points lower. For those of you who aren't sure, that's like half a percentage point. And it's enticing, Your interest rate's already pretty low. I think I got it for like a 3.75% interest rate at the end, but I could have gotten it for 3.25%. And he kind of coached me a little bit. He was saying, hey, historically, here's where interest rates were, 8% or higher. You're getting this for 3.75% on a 30-year amortization. Yes, you can get it for 3.25% if you got a variable rate loan. But if interest rates go up, and they very likely will in the next couple of years, this is 2021, interest rates went up very shortly after that. So I'm so thankful. Chris is his name. Thank you, Chris. I'm so thankful for that lesson as I went in. But listening to your banker and listening to those folks who have a pulse on where interest rates are, how it affects the business, it affects your business directly. So I ended up taking the 3.75% interest rate. I think it might have even been lower than that, but I ended up taking it for the 30-year amortization fixed instead of a variable rate that was lower, because now my interest rate is fixed for, a very long time. And I don't have to worry about, is my interest rate and my payment going to skyrocket in the next 2 years? It's just not a fact. So we look at that on the same level in commercial real estate, and we look at, fixed rate product. We try to refinance into long-term debt with Fannie Mae, Freddie Mac. For those of you who don't know, those are the very large providers that they actually on larger product on 50 unit, 100 unit apartment complexes can do 30-year amortizations, whereas many local banks can only do 20 years. And that makes a big impact on how much cash flow you have. If you guys have a house payment, a mortgage payment, check online, use a mortgage calculator to see how much of a difference it makes. If you go from 30 years to 20 years, whatever your payment is, whatever your loan amount is, go ahead and check right now on your house if you do have a home. Or just, go to mortgagecalculator.org if you don't have a house and go plug in some numbers and see the difference between 20 years and 30 years. And so you'll see if you do that, the cash flow, the amount of cash that you have to pay for your mortgage drops dramatically if you do a 30-year amortization versus a 20. And for us, as business owners, that reduces our risk substantially, because it means that we can hold on to that property. Maybe we have, an expense that comes up that we may have to put more money toward, replacing a certain thing. It just gives us more leeway, gives us more buffer. And so a longer amortization certainly helps us to hold on to the property and to manage cash flow and all those things. And so that's why that's our target for these larger properties, and even for smaller properties. We have an 8-unit apartment complex that we're going to purchase in the next month or so, where that's the exact goal. I mean, we're buying it for very low, like $15,000 a door. We're going in, we're doing renovations, and then we're refinancing into long-term fixed rate debt. And that's going to allow us to pull investor capital back out, give it back to our investors, and then hold on to it for the long term. But even in the short term, it's not a bridge loan with variable rate interest rates. It's not something that's really a factor, I think, for a lot of investors right now. I think a lot of investors feel like 8% is kind of where interest rates are going to stabilize. Do I know? No, I don't know. That's why we go for, small banks that offer us fixed rate financing if possible, because it just minimizes our risk. So even on smaller apartments, we look for those deals where we can get in, great price, improve it, refinance it, take it back to the bank, get a new loan, pull out our investor equity and either hold on to it long term, and maybe we do sell it and we avoid the refinancing. But I've learned in my own time, I don't want to buy turnkey properties. It's just not my thing. I found that the real magic in real estate is when you go in. I've used this analogy a few times, but I love it so much. With the stock market, people always want to buy the dip. There's this whole thing, buy the dip, right? Like you want to buy the stock when it goes down below what its actual value is or what its value should be. You can get it at a discount, and then it's going to rise to that point at some time in the future. Now, time in the market, in the stock market, is also a consideration. If you just buy it and then you wait 5 years, it'll probably be worth a lot more. Same case for real estate. But the beautiful thing for real estate is you can buy the dip like manually. You don't have to wait for some outside exterior condition. You can go find something that is currently in the dip and make it worth more very quickly. It's not based on some CEO's performance in Wall Street. It's based on what is this house worth compared to the one down the street? Does it have the same finishes? Does it, for multifamily, does it have the same income in terms of how much rent is it bringing in? What are its expenses? Can we lower those? You can actually force the value into the property instead of having to wait for the market to hit a certain point where you can sell, like in the stock market where you've bought the dip. You don't have to wait for someone else's actions. You can go impact it yourself. And so that's our strategy, really. We focus on doing that for all sorts of different real estate, products. We're doing it for mobile home parks right now. We're doing it for an office complex. We're doing it for land. We're doing it for single family homes, for apartments, all the different things. Not all of them at this point, but we're doing it for a lot of different assets. And the math is really similar once you start to, get to a certain point. It's, especially in commercial real estate, it's based on how much income is it bringing in. What are the expenses? So like you put those two together, what is the net income for the property, income minus expenses? And then you divide that by what's called a cap rate, which is basically a measure of, how much as an investor should I expect to make as a return if I were to buy this property all cash. And then all the investors, kind of agree on that, I suppose. Typically we get it from a realtor. And the realtor says like, okay, based on the comparable properties selling in this area, these are the sale prices and here is their net income. Here's the typical cap rate that these properties are selling for. So we take that and then we put that into our calculations, and that allows us to figure out, okay, if we have this level of income, this is the value we can expect it to sell for or to appraise for based on some of the other properties in the local market. It's almost like comparables in residential real estate, but for commercial real estate. Mark, thank you. Mark just made a little quip in Facebook. He's funny. Yeah, like basically going back to the concept of cap rates, right? It's just a way of comparing similar or slightly different properties in a certain asset class in a certain market. It allows you to take the income from these assets and determine like what should the value of these be in this area. So I kind of went on a long diatribe. Hopefully you guys got some value out of it. If you guys have any questions, let me know. Happy to answer them. But the original question was when will the market crash? And my answer to that essentially is in commercial real estate in a lot of parts of the United States, we've seen a major correction in sale prices of these properties. We've seen a slowdown in activity. We've seen a decrease in demand. And those two things kind of go together to decrease the sale price of these properties. I've seen specifically in Colorado, sales like tanked severely in terms of the number of properties that were trading between investors and between owners. And again, it's in large part because of interest rates. Interest rates have a very impressive impact on the pricing of properties and what the income is valued at, because it affects your debt. and your debt affects how much can I actually expect to bring home at the end of the day for our investors. So that's kind of where I'll leave that question. When will the market crash? If you guys, again, have any other questions on Instagram, feel free to reach out on Facebook. If anyone currently invests in real estate, would love to get your thoughts in the comments as well. When do you think the market will crash? If you think it hasn't already, if you think it has crashed, how much farther do you think it has to go? Would love to hear you guys and your thoughts in the comments there. Some of the things I want to talk about right now. We're doing a lot inside of our business with just automation. And I touched on it a little bit earlier. Asana is a great way that we automate our tasks and make sure that we're doing things correctly on time and in a certain sequence. And I just want to touch on a little bit more about the different ways that we do it and why it's so important. So, like, artificial intelligence, I believe, is going to be the thing that separates a lot of investors and a lot of business owners from each other. And I've spoken to various folks who, are of different ages, they're in different parts of the country, they have different kind of technological abilities, and you can absolutely see a difference in the level of productivity between those who are very technologically, kind of adept, those who deal with technology and artificial intelligence a lot on a daily basis, and those who are still very manual. And I say that because if you just look at the output of each of these individuals, it might take person A, who is not using artificial intelligence, a whole day to do a task, and it might take person B, 5 minutes. It's truly, truly crazy how much of a difference it makes when you are using artificial intelligence, when you're using various automations. One thing I enjoy using so far has been make.com. If you guys haven't heard of that before, it's a great no-code way to basically automate various parts of your business. You can have these automations talk to each other, and they can perform actions on your behalf on various platforms. It might be Facebook, Instagram, LinkedIn. It might be in your emails. It might be on your calendar. There's all sorts of ways that you can automate various tasks inside of your life. And I just want to bring this up because whether you're listening because you're interested in real estate, or if you're listening because you want to improve your business, or if you're listening because you want to improve your personal life, all of those things can be dramatically impacted by AI. And I think a lot of people are scared of it. And I get it. I totally do. I've had a lot of conversations about this. And there's the concern that it'll take away jobs. There's the concern that, basically at some point everything will be generated by artificial intelligence or created by it, and you won't know what's what. I totally understand all those concerns, but unfortunately, the same concerns were also had about, or fortunately, I guess, depending on how you look at it, the same concerns were had about computers. The same concerns were had about, cars when they first came on the scene, right? People will get lazy, So I think a lot of it truly is you just have to stay up with what's new. Otherwise, the people who were using the computers in the 2000s, again, they were able to provide and produce work that was of much higher quality and in a much quicker time frame than those who did not have that. So whether you're trying to buy a business, whether you're trying to buy real estate, whether you're trying to get more customers to come into your brick and mortar shop or to shop in your e-commerce store, if you are not using artificial intelligence, I'm telling you right now, this is something that you have to start. And if you want help, I'm not someone who's just going to preach at you and say do it and not help you do it. If you want help, I'm happy to hop on a call. I'm happy to share what I know. Right now I'm trying to, kind of create some guides or create some like templates and whatnot so that folks can more easily adapt it into their lives. But aside from me, there's already a ton of people that have created this stuff. And honestly, I'm leveraging a lot of pre-made templates and automations myself because it's just kind of it's an efficiency gain for everyone. person A makes it and person B through Z benefit from it. And they don't have to know how to make it themselves. They just have to know how to apply it to their life. So I'd love to help you guys. If you guys have any questions on how to implement more automation into your life, I'd be happy to help you with doing that. Seriously, send me a DM, just say automate or something like that, or automation, or AJ help, and I'd be happy to help you out. Same with real estate. If you guys have any questions about real estate, if you want to learn about, how do you buy your first one? That is the biggest hurdle for everybody. The first one is always the hardest. And it's so interesting because after the first one, you have a little bit of a mindset shift and you have an identity shift too. You go from someone who's trying to buy real estate or wants to buy real estate to now you're someone who owns it. And you've gone through the lending process, you've gone through the contractor process, you've gone through the property management process, you've gone through all these things, and it's now institutionalized knowledge inside of your own brain. And so it's not as hard the second time. You'll have different struggles, definitely. I mean, you'll probably run into stuff like I did where you didn't know much about, XYZ thing, and then it hits you and you're like, oh my gosh, why didn't I know that? But then that becomes institutionalized knowledge, and it's less surprising each time, and you just get better and better and better at it. And so if you guys are struggling to get the first one, if you don't know where to start, if you just feel nervous about it, if you feel scared, everyone starts there. I started there. My partner started there. My partners started there. I have, several partners, and I'm sure we all feel the same way. It was not easy to start, but it definitely was worth it, and is worth it to continue because, like I said, it just compounds. It gets easier, and you start to have these systems like I shared with Asana or with Make. You start to have these lessons that you don't have to repeat, and you just get more efficient, and you're able to build more relationships that can take you to, the next deal. Maybe it's the next contractor, maybe it's the next whatever, next opportunity, right? Those just get deeper over time. The next conference, I'm going to the Best Ever conference in March. I'll be there. If you guys want discounted tickets, if you want to see me, I can get you 25% off. Feel free to reach out, send me a DM, comment here, comment on Instagram, and I can get you that discount code as well. But conferences for me, I bought my first one in 21, a complex, and then I went to my first conference in I believe it was 22, and it's so impressive the people that you meet there that are so far ahead of you, but also are willing to help you. A lot of the help truly is kind of a mindset shift, right? These are people who have accomplished I'll just speak from my perspective. These are people who have accomplished things that in my dreams, I never would have thought about, right? But they're willing to sit down with you and have a coffee and talk to you about it. It's so amazing, what that does, because it brings it down to earth, and it gives you the belief that you can do it too. And you start to understand and realize, I met one guy, Brian, I have his book right here, Brian Murray. He's right behind me. I met him at my first conference. And he was just the most genuine, down to earth, willing to share individual. We sat and chatted in the hallway for 5 or 10 minutes. And he wrote this whole book. And I read this when I was first starting, and I just asked him questions. And, I'm sure he doesn't even remember that exchange. But Brian started as a teacher, and he hadn't bought anything before. He didn't buy a house. He didn't buy a duplex. He didn't buy a sixplex. He just went and bought an apartment complex. And then he wrote a book about it. He bought 10 more. Then he went and wrote a book about it after being a teacher. It just, it blows your mind when you start to think about the origin stories for a lot of these people, and kind of where they started, and then their willingness to show other people the way. I just want to share that message. If you don't know where to go, read a book. If you don't feel confident in going there, talk to someone. And that someone they might be online. You might find them at a conference. I actually was following one of my mentors for, I think, a couple of years. His name is Jose Linares. Hey, Jose. But I met Jose, again, at the same conference that I met Brian. And Jose ended up being a mentor for me from that point on. And I just met him in person after I followed his Instagram for a couple of years. And so, it's just taking that first step. I called another guy, Scott. And Scott was a mentor for me. He's in the mobile home park space. Again, he's still a mentor for me. I think I called him like 4 years ago. And I've since met Scott in person. Again, it was at that first conference. This is crazy to think about. I met so many people at that first conference. But I met Scott in person. And you just get the opportunity to see what's possible and to see the development of that person and to put a face to a name and to shake that person's hand and to see they're not that different from me. They can do it. I can do it too. And look at what they're doing now, by the way. They may have started at a house or a duplex, but now they're buying mobile home parks, or they're getting huge deals with other partners or sponsorships or whatever it might be. I think it's just staying with it and collecting that knowledge either from your own experiences or from the relationships that you make, and reflecting on it, and applying that to the deals that you do and continuing to snowball that. So again, just wanted to share that message. I think there's a lot of people who may watch this and be like, okay, AJ, that sounds cool, but I can't do that. And I'm here to tell you that you can, and that I will help you. If you have any questions, if you want to reach out, if you want to be like, hey, again, I don't know where to start. The first thing I would recommend you do is read some of these books. This is a good one. If you want to start in multifamily, this is a great book. It's called The Definitive Guide to Underwriting Multifamily Acquisitions. It's by Rob Beardsley. I've also met Rob. He's very knowledgeable. I know he's done a ton of deals. And this just breaks it down. I mean, it's a very quick read. It's not complicated. There are things in here where you have to study it a little bit to understand what these things mean. But it's an actionable book. You can read this and you can start to apply some of these things. And what's even better, I think even at the end of the book, Rob gives you an analyzer where you can go plug, and it's free. And you can go plug in some of the stuff that you've learned here to start to understand how it works together. And so this is a great book to start with for multifamily. Another great book that I've referenced so far already is Crushing It in Apartments and Commercial Real Estate, Brian Murray. This is a little bit of a longer book, but there are stories here, and there are vignettes. There are little things that you can learn from and remember, and I even look back on this book sometimes and I think about my own experiences so far, and I'm like, oh wow, okay, yeah, we had that too. Or I look at it sometimes and I'm like, oh man, he said I should do that. Okay, I need to apply that to the next deal. So this is a great book that I would recommend you guys look at. There are some really awesome stories and really creative strategies in this. I'm going to leave it at that. I hope you guys read it. If you don't want to read it, you can also check out my older Facebook posts. It's way back when I first started. I think it was 4 or 5 years ago now, maybe even 6. I posted summaries for this book and some of the other books that I've read, chapter by chapter summaries. So that'll save you guys some time if you are interested. But this is a really great book to read as well if you're interested in starting in apartments and commercial real estate. If anyone has any questions, feel free to ask. But something from Grant here. Yes, you will. So Grant said, thanks for the share. I will buy my first commercial deal this year, and I will probably ask you some questions along the way. I would love it if you did. I'd love to share it as well. If you guys have any questions, that's a beautiful thing really about, and something I learned as well throughout this journey is if you have a question, someone else probably has that question too. I felt kind of dumb when I first started and I was asking questions and I was like, this seems kind of basic, but I don't know the answer. I don't know where to start. It can get kind of overwhelming. If you ask a question, other people will, especially if you're in a group, other people will very likely either come up to you afterwards or think to themselves like, dang, I had that question too. I'm so glad that you asked that. So the same applies here. If you guys have a question, during this live or during future lives, as I'm talking to people who are real estate operators, who have been in the business for years, who are doing some really like amazing different things, if you feel like it's like too basic of a question, don't. If you feel like you shouldn't ask it, please ask. They love answering questions. I love answering questions. And I think it just makes everyone feel a little more confident and comfortable to start taking things down. One thing that Grant mentioned in his comment was he'll buy his first commercial deal this year. And one thing that I want to reinforce for people, I've had multiple calls this week with various investors, either new investors or investors who have been in the business for a while. The thing that people get in their brains that is kind of hard to shake because it just makes the most sense is that the only commercial deal to buy are apartments. And it's just not true. Like, I buy apartments, I like apartments, but there are other deals that are great and have really great returns. There's apartments, there are mobile home parks, which we have had a great time with so far. And I've spoken to multiple operators. They've loved the management side of mobile home parks in comparison to apartment complexes, especially tenant-owned mobile home parks, which I'll just kind of touch on real briefly here. In mobile home parks, there's a differentiation between parks that are have park-owned homes and parks that have tenant-owned homes. So park-owned homes, the park is responsible for all maintenance, repairs, might be responsible for utilities, all these different things. Whereas with tenant-owned homes, the tenants are responsible for anything that goes on inside the house. Like, it's on them. You don't have to repair it. It's basically their house and they're renting the lot from you, and that's like the entirety of your obligation. I guess the other parts of your obligation would be landscaping. It might be roads. If you are still responsible for utilities, you have to make sure all that stuff works. But the really cool thing about mobile home parks is just for a large portion of it, it's less management intensive than apartments. And the returns can often be pretty good, if not better sometimes. So I'd say to a lot of you, don't close your thought processes when it comes to real estate investment to just houses and apartment complexes, because there is a lot more stuff out there. I haven't even touched on, office. Office has had honestly a rough go of it in the past couple years. And it's because a large part of it has been, remote work. Another large part of it has been interest rates. But there are still great office deals out there. And there's something called triple net leases. If you guys are not familiar with it, a triple net lease is essentially the tenants are responsible for, taxes, insurance, repairs and maintenance. You may even find some deals where, and we found this in one of our deals, where the tenants are doing improvements to their own place inside of the office complex. Like, they're improving the complex for you where they stay because it makes more sense for them to put more dollars into it and make it a nicer space than to just be for their business, because they're often operating a business out of there. It makes more sense to upgrade the space than it does to keep it and just kind of have the same space. So that makes your space nicer, makes it more valuable, but it also makes it more valuable for them because it increases their net income and the amount of revenue they're able to generate. So I think that is pretty unique to office. Apartments, you probably aren't having people who are coming in and installing a brand new granite countertop into an apartment that your ownership group has, because it just doesn't make sense for them. They'd go buy a house if they wanted to do that. For a mobile home park, you may not have someone that's coming in and improving the roads, right? If it's a tenant-owned park. But for office, it's not uncommon for you to have people who are improving their own spaces and making it nicer, so that they have a better space and you have a better complex. So that's another thing that I'd boost here is just office in terms of different opportunities. Another thing that personally I haven't delved very deeply into, but I know people who are doing very well in this space are industrial. So warehouses specifically. There are folks, self-storage is considered industrial. There are folks that develop these things, and that's their entire business model, is they just build self-storage facilities or they build warehouses and they sell it to someone else. Maybe some of them keep it, but a lot of them find it makes a lot of sense to just build it and sell it off and take that profit and roll it into something else. And so there's a lot of capital that's being deployed into those areas by very sophisticated individuals and trusts and family offices. And they do it because they see the potential returns, and they also see, the credibility of the operators, and they want to invest in that space to diversify. And so, again, I would just highly recommend that you guys keep your horizons open. Don't think there's only one way to invest or one place to invest. There are a lot of great growing markets, a lot of asset classes that are doing well, despite what some people may consider, a market crash. And that's another thing that I'd touch on too, is like real estate is what we call hyper local. And so you may have one market that is seeing a large decrease in rents, and one of those has been some of the metropolitan areas in Texas. Large decreases relative because, Texas has had soaring rents for the past 5 years, maybe more. And to even have a large decrease from consecutive years of large increases is still relatively a minor decrease. Like Texas rents are not on discount necessarily right now, even in the major metropolitan areas. But you have seen a slowdown in rent growth substantially. And the reasoning for that comes back to just supply and demand. With Texas, with like Austin, Texas, for example, people have seen rising rent growth for so long that they've started to build more apartment complexes. Why do they do that? Well, they see what these are selling for, and they see the demand in the area, and they see how any apartments that come up get gobbled up by people wanting places to live. And so people in the past few years, companies in the past few years, have made a concerted effort to build more complexes in a desired market like Austin, Texas. Well, when you have interest rates skyrocket, and when you have belts tightening because of inflation, and you have more co-living, people living with parents or roommates or what have you, that's going to decrease demand as supply is increasing, because you have all these developers who started 2-3 years ago working on these apartment complexes. Well, now they're getting finished, and now people are not needing them. And that has an impact on rental pricing. Is that going to last forever? No. There's going to be an equilibrium, and there's going to be more need in those areas as population continues to grow and the economic cycle continues and changes. But you are seeing in some major metropolitan areas market rent decreasing, even as in other areas like Iowa or Northwest Arkansas or Kansas City and some of these other areas, rents are increasing. So when someone says, has the market crashed? Is the market going to crash? When are rents coming down? Why are rents so high? It really depends on where you live. Are there more, national causes, and are there more national effects? There absolutely are. However, in the large part, real estate's pretty hyper local. Like, just because interest rates go up or just because interest rates go down, it doesn't mean necessarily in your hometown that prices are going to come down or prices are going to go up immediately. Maybe they will at some point in the future, but it really depends on how much supply and demand there is in your specific market. If you live in a place where there's just an incredible amount of demand because new jobs are there, maybe they opened a data center, maybe they have more companies moving into that area. Well, just because interest rates went up, that doesn't mean housing prices are going to come down. Because you have, John, Betty, Sue, Jim, Joe, Billy Bob down the street. Everyone wants a house still because they have to have a place to live because there are jobs here and people need to move here. Whereas if you were in a different spot, if you're in a different location, and maybe you're in like a really small town, let's say you're in a really small town in Oklahoma, and interest rates have gone up, and people weren't really buying houses there anyway because there's no reason to, prices are probably dropping. Maybe a little bit, maybe a lot, but it's dependent upon the supply and the demand of that local market. So I just want to make that point in terms of the original question. When is the market going to crash? It's very dependent. I wish I had a crystal ball. I wish I knew which markets were going to, skyrocket before they did. If I did, this would be a very, very easy game to play. But there are indicators that we look at, even so, to make our best estimate of what markets are going to continue to see growth, or what markets will grow in the near future. And we look at things like I already mentioned, population growth, which population growth is often driven by job growth, and job growth is often driven by policy or by industrial manufacturers, or folks that are in the business, in various businesses, moving their companies to certain areas, or getting subsidies and what have you. So we look at where our business is growing, where our business is moving to, where are people moving to often follow those businesses. And that gives us a really good indicator of which markets are a good place to place our bets. And when you're picking good markets, I had a really good conversation with a guy today over euros. He owns, I think it's like 30 apartments in my hometown. And we had a conversation today about, just like buying right. And he was talking to me about Colorado. Like, he bought in Colorado, 20 years ago. And Colorado did not see a huge jump in pricing until pretty recently. Well, he's held some of those apartments in Colorado all through those 20 years, and he's seen just how much of an impact people moving there, jobs moving there, property prices increasing has had on his investment. He thought it was good at the beginning. Well, now it's really good because there's so much growth there that the pricing of his property is just skyrocketed. Well, it's not anything he did necessarily. Like, he improved it at the beginning and it increased the pricing, absolutely, and it increased the value. But he can't control what's going on in the market. He can't control which companies move into whatever part of Colorado he bought this apartment complex. He, in some instance, got lucky, but he also bought in a place that was likely to grow, right? So when you have that at your back, when you're choosing good markets to invest in instead of ones that maybe are losing people, where jobs are fleeing from, where people don't want to live, just kind of take the opposite of everything I've said, right? If there are businesses that are leaving because it doesn't make sense to stay in that state, or to stay in that city, or to stay in that county, if there are people that are moving because maybe it's dangerous, there are amenities that are not there that are in other places, there are opportunities that are not there that are in other places. Long term, the prospects for that place, for that city, county, state, country, who knows, long term, those don't seem very good. So looking at where are people incentivized to move away from, where are people incentivized to move to, and businesses alike, that gives you a good glimpse into what are some of the areas where it's likely that an investment will grow because there's more demand for that product, given its location or given the policy or population growth or what have you in that area. So it's about time, 7:01. I appreciate you all joining me for today. We're going to have another Capital Conversation podcast next week. I'm hoping to get a self-directed IRA expert on. She is a pretty well-known name in the industry. If she's not on next week, hopefully she'll be on the week after that or sometime soon. In the meantime, if you guys have any questions, if you would like help with automations, if you'd like help with getting started in real estate underwriting, feel free to reach out to me. I am at AJ Smith Real Estate on Instagram, Facebook, LinkedIn. I post on there pretty much every day. I try to, at least. If you guys have any questions, feel free to just send me a DM on any of those platforms. I'm happy to help out. But until then, I'm AJ. This has been Capital Conversations, and would love to stay connected with you guys. Until next week, I will see you then. Take care.